So you're warning that growth could have an uptick as others are fearful of growth. What looks the most mispriced if this is the case, that growth could be higher than expected, as with inflation?
Yeah, I think there's a couple of things. When we look at short-term inflation expectations, you look at, for example, one-year CPI swaps, that's still barely 2%. That clearly is not factoring in any kind of perhaps a pickup in inflation, or not even a pickup in inflation. Inflation just staying a little bit stickier, right? So we don't have to see a big pickup in inflation. Just in terms of your question, in terms of what is being mispriced, we don't have to see that. It just needs to be a tad stickier than thought. And already we would see short-term inflation expectations really mispriced. I think it's also some parts of the cyclicals and equity market. You know, when we look at materials, you look at energy as well. You know, we had these China demand concerns 2-3 weeks ago around oil prices. I think that's a bit misplaced, because when you look particularly also at positioning in oil, look at Brent net longs. I mean, we're a net short now for the first time in history. So, you know, how do you want to be utterly bearish on that still when everyone's given up on that already? So there's quite a few, I think, cyclical things, short-term inflation expectations that do look quite attractive now. And overall, of course, when you look at equity markets, if inflation stays a bit stickier, but it stays stickier because of growth, it stays stickier because spending continues to run at a solid pace, that's really good for earnings, that's really good for equities.